All right, let's dive right into Medtronic. Last quarter, management made a pretty big promise to investors. They said an acceleration was coming. Well, today we're breaking down their Q2 fiscal 26 earnings call to see if they actually delivered. The big question is that engine finally really turning over? Let's get into it.
And right out of the gate, the CEO, Geoff Martha, left absolutely no room for doubt. There was no beating around the bush. He basically framed the entire quarter with this one single statement. It was a clear signal that, in his view, this is a major turning point for Medtronic.
So, do the numbers actually back them up? Well, take a look. It was a really clean beat across the board. Earnings per share came in a solid 5 cents ahead of what the street was looking for, and revenue also beat expectations pretty comfortably. But honestly, the number that really matters here, the one you should focus on, is that 5.5% organic growth. That right there is the proof of that acceleration he was talking about.
So how did Wall Street react? Well, they absolutely loved it. The stock shot up almost 5% on the day. And look at the volume. It traded on more than 2.5 times the average. This wasn't just some quiet little drift upwards. No, this was a big, decisive move. Investors were clearly sending a message that they liked what they were seeing.
And that really brings us to the core of it all, right? A nice earnings beat is one thing, but a reaction like that from the market? That tells you there's something bigger happening under the hood. So what exactly is fueling all this new momentum?
Well, the answer, when you boil it all down, comes from one specific part of the business that is just absolutely firing on all cylinders, and that is pulsed field ablation, or PFA. This technology has basically become the company's new growth engine, and it was, without a doubt, the single biggest reason for this quarter's beat.
Okay, now this is where the story gets kind of wild. I mean, look at the sheer scale here. The entire cardiovascular business grew 9.3%. That's its best quarter in over a decade. But look inside that number. The cardiac ablation part of the business grew by a mind-blowing 71%. That's not just a successful product, that's a phenomenon.
And if you thought 71% was nuts, let's drill down even one more level. Within that cardiac ablation business, the US PFA franchise itself grew over 300%. Let's be clear about what that means. This isn't just a growing market. This is Medtronic aggressively walking into a massive $12 billion market and just taking share from their competitors, plain and simple.
So you're probably wondering, how on earth is that happening? Well, it's definitely not a fluke. They have a whole system here. The installed base of their Affera mapping system, that's the razor, it literally doubled in just one quarter. And once that system gets into a hospital, Medtronic starts selling the majority of the disposables, the razor blades. Management's so confident they're not being shy about it. They're targeting another $1 billion in revenue just from this one franchise.
Okay, so PFA is the star of the show, no doubt about it. But the point management was really trying to hammer home on the earnings call is that this is just the first engine to get going. The real story here is about moving from having one growth engine to having a whole portfolio of them. So here's the game plan, laid out nice and simple. The PFA acceleration is what's happening right now. But coming up in the second half of this year, they're expecting to launch 2 brand new products into massive markets, with Symplicity and Altaviva. At the same time, they're shooting for US approval for their Hugo surgical robot. And then, to top it all off, the plan is to spin off the diabetes business next year. It's a busy roadmap.
So let's quickly touch on these. What exactly is the Symplicity procedure? Well, think about it as a treatment for people with high blood pressure that just won't go down with medication. And here's the key takeaway. The potential market in the US is 18 million patients. And they just got a really positive Medicare coverage decision, which basically opens the floodgates for this thing to get adopted.
And at the same time, you've got Altaviva. This is a new implant for urinary incontinence. And again, the scale here is just huge. We're talking about 16 million people affected in the US alone. The early signs are looking really good, too. The company said their training programs for physicians are already oversubscribed. That's a great sign. Doctors are literally lining up to learn how to use this thing.
All right, so you've got one growth engine absolutely roaring, and you've got several more spooling up and getting ready for takeoff. It should come as no surprise, then, that management felt confident enough to raise their guidance for the full year. This is really where they put their money where their mouth is.
And yep, here it is. They bumped their forecast for organic revenue growth up to 5.5%, and they nudged the earnings range higher too. It's a really clear signal to the market. They're basically saying, hey, that awesome quarter you just saw, that wasn't a one-time thing. This is the new trend.
But wait, it actually gets even more impressive. This is the part that really stood out to me.
They delivered this guidance raise while also absorbing a nearly $200 million headwind from tariffs. So think about that for a second. The underlying business performance is actually even stronger than these numbers suggest. It's like they're trying to run faster while running straight into a strong wind.
Okay, so let's land the plane here. We've gone through all the numbers, we've looked at the pipeline. What's our final take? What's the verdict on this quarter? And what should we be looking for from here?
For the next earnings call, the story should be pretty straightforward. First, we're going to want to see that the incredible momentum from PFA is continuing. And second, we should start to see the very first, even if they're small, revenue numbers trickling in from those new Symplicity and Altaviva launches as they get going.
And what about the stock itself? Well, look, after a big pop like that, it's probably going to need to catch its breath and consolidate a bit. That's totally healthy. From here, the next big catalyst is all about execution. As the market starts to see real proof that Symplicity and Altaviva are ramping up, that's when we'd expect the stock to start challenging its recent highs again.
So when you add it all up, the accelerating growth we're seeing right now, the deep pipeline of new catalysts on the horizon, and a guidance raise even in the face of headwinds, for us, the rating is clear. Outperform. It really feels like Medtronic has finally turned a corner.
All right, for this last part, let's have a little fun with it. We've laid out the fundamental case, so let's talk about the so what. I mean, how could someone actually express this multi-year view in the market? Here's what we're calling an outrageous but plausible pitch.
The big question isn't really about what happens next quarter. It's about what happens over the next 2 years. So how would you structure a trade to try and capture this entire pipeline story as it unfolds?
Well, here's one way you could think about it. You could look at long-dated call options. Now, why so far out, like 18 to 24 months? Because you need to give these new products, Symplicity and Altaviva, enough time to really ramp up and start contributing. And setting a strike price maybe 15 to 20% higher than today's price gives you leverage. The whole thesis here is a bet that this pipeline will eventually force Wall Street to see the company in a totally new light, driving a major re-rating of the stock.
And of course, we have to end with our usual reminder, this has been our breakdown and analysis of Medtronic's quarter, but it is definitely not financial advice.